All right, everyone. This is the stream everybody has been waiting for. Amit is out having fun in California. He's at GTC doing GTC things. So we thought we would do the Steve Squared show.
Steve Squared show. I actually kind of like that. I kind of like that. Dude, I'm gonna go have dinner with Steve with Amit in a little bit later tonight. And I'm like, I don't know. I love these guys to death, but I'm a little worried about they want Chinese food. They're sending me the links. I'm like, I want to take them somewhere nice. Them as in it's Amit, Evan, and Stock Talk. But I don't know. They seem like more like they wouldn't appreciate the nice stuff anyways. It's more like we're just gonna hang out. I don't know what the food situation is over there. You probably know. Are they foodies? Not foodies.
I mean, Amit has acquired a very good palate for very good red meat.
Oh, just for the steak. Well, okay.
Yes.
I mean, steak is steak over here. We just have the regular Mortons, and unless
Mortons, I love Mortons. So
yeah, there's Mortons, Alexander's, and some bougie places, but I don't know. Steak is like you can get it everywhere here. I guess what is it? The chat probably like Asian fusion, maybe better. If you want some like San Jose-esque food, but Indian street food. Amit is up for Indian street. See, we don't have Indian street food at all here. That is totally a New York thing. Like you get what's not Indian, like Greek street food.
Oh yeah, the Greek, the all that stuff.
Yeah, that is all New York. That is not here like at all. It's laughable here.
So before we get started, please take a moment and read the disclaimer. We are not your financial advisors. We have no idea what we're talking about. Please do your own due diligence. Don't buy anything because two guys on the internet are talking about it. Always do your due diligence. Thank you very much. All right, Jason. I'm a moron.
Thank you very much.
And you need to knock some sense into me.
So I wanted to stream with you because you've been talking about trying to do this, learn this technical analysis thing. And I think it started with Amit for sure. With the male astrology. By the way, I think we're finding out it's more like astronomy, not astrology. There's a difference. Astronomy versus astrology. So I'm good with the astrology. Is it astrology? Anyways, it's not the tarot cards per se. It's the legit science. One is very different.
Thank you very much. Really appreciate it. So, Jason,
in the chat, by the way, how do I see who's on mine? Because we're doing the stream.
You're gonna have to probably go to
YouTube
and look at your YouTube channel to see only your chat. If you're looking at it in StreamYard, it's going to show both.
Oh yeah, but okay, so they both get pulled in.
Yeah, so if you type in StreamYard, it'll go both chats.
Love it.
Yeah. All right. I know you cover a lot of companies would admit. The first one we need to go over is Reddit. So Reddit. I was saying on Wednesday or Thursday, I started talking about it, and I said, you know what? I don't use it. I don't understand why people use it, but the fundamentals are amazing, and I should take a position, and I never did. And whenever that happens, it goes up. So what the hell did I miss from a technical perspective?
I don't know that you missed anything. So before I even share the screen, I am here today to find the next Micron, just so you guys know. If you don't know, Steve actually said, if we're going to be so bullish Nvidia, why are we not uber bullish Micron at like, I don't know, $100?
Right.
Didn't put $1 in that I know of.
Nope.
Absolutely goes to the moon. So it's what I'm going to be hunting for today. I also know that if you're on my channel, Steve, if you could do a quick intro. If you're on my channel, Steve is like a fundamental analyst from Seeking Alpha. I think what's your rank right now? You are top. I mean, he's top.
At some point, I'm not gonna be this high. Okay.
He's hot. He's hot from a fundamental perspective. And if you follow me on Twitter or whatever, you guys know there's three things that we need to look at when it comes to picking stocks. And we can all agree this is a stock picker's market 100%, right? And so the three things, one, fundamentals.
See, I slipped. I'm no longer top 20. I slipped.
Oh, you need to step it up, man. 29? What are you doing? At 44,000?
I mean, I was 18 the other day. At some point, I'm going to be like 250 or 1,000. Like, just because this has been like this for some time.
This guy is clearly slacking.
Do not think that this is going to stay like this, please. Okay.
So, what we look at, fundamental analysis, technical analysis, and sentiment analysis, the three things combined, right? And as a technician, whatever, I can find out when, generally speaking, the stock is going to be ready or where the good areas are. I can't save us from a bear market. I'll tell you that right now, if that's happening, but I can tell us like where the areas will be to DCA longer term. But for Steve's channel, technical analysis is more or less about timing a little bit better entries and exits, or hedging, if you will. So if you're in the never sell camp, it's not technical analysis, but it can help you out a lot in getting some better entries if you're a little bit more patient, if we can find some of those things. Otherwise, most of what I'll talk about right now is good for roughly a couple months. That's what we can be ultra precise on. And then anything aside from that, sentiment analysis can overcome. So we get a Trump tweet, things like that. Nothing's 100%, but I think take it with a grain of salt. If you like it, cool. If not, no big deal. But if you're an investor, learning technical analysis to me is something that can kind of like supercharge your compound effect over the years. Just knowing the right places to add. So that's my spiel. I don't know if you want to add anything to that, Steve, or what you're interested in.
Yeah, I mean, I'm interested in trying to get myself to actually pull the trigger, because I have no problem throwing good amounts of my portfolio into strong things that I know, such as Nvidia, Amazon, Meta, S&P. Like, that's no brainer. If I think there's value, I'll just put it in. But when I go looking for value, especially with companies with products I don't use, like Reddit, to me, I don't understand how Reddit survives, because why would anybody want to go on Reddit? We can just type into a Claude or a ChatGPT.
Fair point, right?
You got YouTube, that type of thing. So the numbers looked amazing. I didn't buy it. Maybe technical analysis can help me.
Yeah, so this is going to be a combination. So the fundamentals, if you have a fair value price that you think is good, if you're going to be a fundamental trader, typically what you're looking for is to buy something that's undervalued. So that means you have to have a fair value estimate for the stock. And then the rest of it comes into the two other categories. Sentiment, which is the market's appetite for risk in that specific, not even sector, but even a little bit further down, maybe industry. And then on top of that, technical. So any one of these things are out of whack. The whole thing's out of whack. So you need all three to kind of line up. So that said, I will share the screen without further ado. Let me see if I get the right screen. All right. So Reddit. So what I usually do, and my son, I'm actually in the back house right now, and we have a sandbox out front, and I caught him climbing on the desk earlier. So there's sand on my desk, and the keyboard is a little out of whack. So we'll blame him. But so what I'm typically going to do, is anybody new to Technical Tuesday at all? Just out of the gate.
There probably is a couple of people.
Chat's always lagged, man. So we'll do SPY. This is Steve's pick. So we'll do this, and then we're gonna ask Steve, chat, if we're actually fucked in the market in general after this, whether it's NASDAQ 100 rules changing for SpaceX inclusion out of the gate, or if it's private credit, or if it's already shaking, or any of that kind of stuff. So that, by the way, that's sentiment, right? So those kind of things are sentiment, and that's going to have a lot to do with Reddit. If I were to clean this up, most people, first of all, we're not doing Yahoo charts here, so it's a little bit more up to date. What I have here, this is actually me and Amit's chart because we've been looking at Reddit. I don't like it personally just yet, but I think it's close. So 130 is not, it's like, it's a random kind of number. What we typically do is technical analysis when it comes to the actual science and whatever. It's like a lot of measurements, and it's a lot of finding out where price has moved in the past, and like where volume kind of piles up in the past. And I use certain things. So on the right hand side of my screen, you'll see this little like woogity looks like mountain ranges on the right. This is actually a visual representation of volume. And so we can see where buyers and sellers are kind of stacking up. So what I'd say is this will typically act like a bit of a mountain range down here. So this, from a long-term perspective, this whole area is what I'd say support, but it goes down to about 120. So 120, or as close to as you can from a longer-term perspective, or below even, is where I'd like to nibble at it if I'm an investor, right? Maybe even lower if I can get something like that. If it's below 120, I will skip the $100 level altogether, and I'll just wait for like 75, just as an aside. In this moment in time, when it comes to kind of blending these two things, whether it's like investing and trading, the whole market's in a weird spot because a lot of things are at like investable levels. So I'll caveat pretty much anything with like, as long as you have a 2 to 3 or a 3 to 5 year time horizon, like you're not going to use this money for the next 3 to 5 years. You're not going to sell it. You're just going to hold it. A lot of things are like, it's all good, but you don't want to kind of blow your load too early. And we say like premature allocation. So this is where you kind of blend into. So ideally, if you don't have anything, it's worth a very small position right now. It's not worth a large position here, but the closer you can get to 120 or lower, which is this lower, like right hand, the kind of like, looks like a mountain range. We usually call it like a high volume node, but the mountain range on the right hand side, this is where actually the real support is. And what this little image here is, and I'll remove that. I'll take some of these drawings off and we'll zoom in. But this is from, what date is this? March 2025, in this area where it spent about 100 days going pretty much sideways and creating a new base. This is where the prior investor base is. So when the stock gets to this area, as close to this area as possible, it will have some memory. People that bought it there in the past last year will think, oh, I remember buying it back around $100, just below 120, and it did really good, and I made a bunch of money. It went back up, right? And they're going to remember that's what happened last time. And so this area becomes future support. Right now, what's happening is that people that probably held on too long are also in a bit of a bind, right? If they bought over here, they held on too long, and now they finally have this moment to be like, oh shit, I should have sold a while ago, but I didn't. So now I'm close to breaking even. I'm probably just going to get out while the market sentiment is not good around software as a whole, because the sentiment is not on your side right now. If the sentiment shifts in the sector, then it becomes like a screaming buy. And what will show up in the charts is that this will be trading over 160. So the two things that I'm giving you right now are that, one, as close to 120 or below as you can. That's when you want to accumulate a little bit at a time, kind of DCA in that general area. But if it's over 160, you can just start adding more aggressively because you have a winner at that point, and it's already back on its way to recovery. So if you want to wait to be more sure, it's over 160. If you're a good longer term DCAing, as close to 120 or below as you can. That help? He's taking notes, everybody. Chat, the guy's taking notes.
No, I actually am.
So it would look like this. I'll add like you can add a little bit here, and then you'd want a bigger entry here. That's it. You don't want to just, if it's at 100, like I said, I'd skip that altogether and wait for like the floor to fall out and come down towards 75. Because at that point, if it's below 120, we know that something's generally wrong. The sentiment's really gone like against us. And so if I'm going to add into something like this, it would have to be more meaningful. Like I don't want to just DCA to DCA. I'd rather not jump in the way, not try and catch a falling knife. This is all equity, by the way. It's not ready for options. And it would be just like adding when I get a substantial discount to actually affect my cost basis. So I'm assuming that is your time horizon. So that's with like a 3+ multi-year time horizon.
I'm not sure what my time horizon is. I started looking at it, and when I look at the fundamentals, it looked like it was beaten up way too much and it was oversold because of how, one, profitable it is right now, and two, where the analysts see the growth on earnings and revenue. And it looked like it was trading around 31 times this year's earnings and 22 times next year's earnings. Huge amount of forward growth. And I started looking at it, I'm like, I want to see it recover a little bit because I just wasn't sure that it wasn't done selling off because of what the chart showed previously. And then, of course, it's up like 11% in the past 3 days.
That's fine. So because you brought it up, so I'm going to use the term oversold here. That's in regards to something called an RSI, which is the indicator on the bottom of my screen.
What is the RSI?
It's not oversold. It was oversold, like right here on the day after earnings, about 137. That was the lowest oversold reading in its inception. So since the stock has been a publicly traded entity, that is the lowest RSI rating it's ever had. Anything technically below 30 is quote unquote oversold. But to that end, this red line here, and I'll just kind of like make a whatever right here. This is the spot where oversold was the highest, literally right here and right here. So when something is oversold, it doesn't mean that it's going to bounce. It did bounce, but right here, it doesn't mean that's the bottom by any means. So this whole bottom indicator here is an RSI. This is a daily chart. This is a daily RSI. What's important from a trend perspective, and the better way to use RSI, again, we can look at 1,000 charts over. Oversold from a technical definition is below 30, but that does not mean, it just means it's going to take a breather from going down. It might take a breather from going down, or overbought. It might take a breather from going up. In this instance, from a trend perspective, there's a 0 line, or not on RSI, it's a 50 line. So this whole bottom box, this is 50 right here. So but you can't see this because it's so, let me see if I can make this thicker. Oh yeah, that's way better. So this purple line I just made is called RSI. And this white line is the 50 line. So if the RSI is over 50, then your trend is actually starting to turn around. But when you look at this in the past, and here's another example, just this little box right here, here, and we'll just do another one as a comparison. The bottom half of the screen is RSI, top half of the screen is the chart. that white line again, that's the 50 line. It's going to chop in there, and in this moment that becomes like a lot of sideways action. It doesn't actually break out until you're well over the 50. So again, misuse of RSI from most retail traders is they look at oversold and they're like, oh, it's gonna bounce. Yeah, it'll bounce, but it doesn't mean it's done going down. It's in that moment. It's the 50 line here that's going to give you the better trend. And this is the moment right here where that actually happens on the daily RSI. We only use really daily or weekly if you want to, but higher timeframes for RSI. that you actually get a move up on RSI, which corresponds with the chart going here. And now people are like, oh, it's overbought, right? So overbought stocks, you know the saying, right? Stocks stay oversold and overbought for a long time. But what you might not know is that overbought stocks are also the best performing stocks. So from this point where it gets over 50 and it becomes overbought is here. This is overbought. This is the highest overbought period that Reddit has had. Now that's overbought. Again, it's not an auto sell, because what happens? Yes, it pulls back to the 50 here, but it's just like a blip on the chart. It's a nothing burger. And it's not until you get back. I have an apprenticeship that teaches this kind of stuff. If people are interested, this is a legit signal here. It's more complicated. This is something called bearish divergence. So for RSI on Reddit, we're actually going to look for something called bullish divergence later, which is the stock giving me, and I'm actually getting that right now. I'll give you that. So it's building some kind of base where the trend line of the lower RSI is trending higher. So I have a higher low on the RSI, but I have an equal low on the stock. Might not be exactly ready right now, but it's building into something. And for Reddit, you don't really want to go all in all at once, because the personality of the stock also is very squeezy. So when it goes, it's just gonna go. You're like, it's just gonna go. It could be something like Catalyst or like earnings or things like that. But again, it's the 50 level on RSI that's significantly more important. Overbought, oversold, clearly not that big of a difference, or not that big of a signal if you're using this indicator. I don't have a timer today. They're calling for a timer, but I'm over time, so we can move on.
All right, which one do you want to look at next?
Well, typically we would start with like SPY or.
So let's do SPY.
Well, I wanted to know, how screwed are we? What are your thoughts on this space?
I can't answer that till tomorrow.
Oh,
and here's why. You got the Fed tomorrow.
Yeah.
And I'm worried about what the Fed is going to say, because you have oil over 90. We don't know what's really happening overseas.
You remember when you texted me the other day and told me that oil was going to go over 100, right? On the stream. And I was like, yeah, for sure. It's going over 100. I wasn't joking. But
so we have a very serious situation, and it's not about the rate cuts, because we're not getting a cut. We all know we're not getting a cut tomorrow.
It's not about the rate
more
cuts.
What they say, and if what they say is going to impact the consensus numbers. And if oil stays above for too long, it doesn't matter where CPI or PCE comes in next month, because they're backward-looking numbers. It matters what those consensus numbers are. And if those consensus numbers jump to 3.5 or 3.6 or 3.7, then you have a narrative with the Fed that inflation is increasing. Inflation is going to be sticky. Oil's increased for too long, where now the ramifications will get felt through the economy. Yep. You have fertilizer prices going up at the wrong time, because now is growing season, harvesting season coming up.
Is that the reason, though, or is it just the debasement trades?
No, but think about it. Springtime, big crop season right now. So you don't want higher fertilizer prices. That gets passed on. You got transportation costs going up because of oil. You have input costs on manufacturing going up because of oil. Oil is a very big thing.
There's like little to no shot that we don't have. And the last CPI number, so if you're confused as to why the market's not, moonshotting to the upside, it's this, right? And this is sentiment. And the last CPI, still hot. GDP was like scorching hot not that long ago. So now it has to come back in anyways. So we have a GDP or a growth rate as a country coming down slightly, in unemployment going up with sticky inflation. This soup mixture is something called stagflation, or hints of, and in that situation, that is the worst scenario for equities as a market, but the best scenario for commodities as a market, which again plays into the fertilizer stocks. They have tailwinds right now.
Well, yeah, and it's not just fertilizer stocks. It's more
No, it's not.
cost of food
Sandisk,
goes up. Like everything goes up
it's
with this because everything's tied to oil and energy. And
energy is everything. Like, so
it's
I've
everything.
been saying that for a really long time. I don't think that changes whatsoever. And also the good part about the market is that nobody is questioning the fact that we are in fact in the middle of a generational data center build out, right?
Yep.
So like that is not in question. So you see, if you find stocks that have all those kind of themes tied together, that's your best case scenario. That's your A+ sentiments, right? So that is your Micron, that is your Sandisk, that is your even Corning, as long as they're not too expensive. Micron's still, I don't think that expensive, which is crazy, right? Corning's more expensive now, so it's going to be held back. Even Freeport, very expensive now, but it's not going to break down, right? Oxy, VG, all those kind of things, not expensive. Now they're coming back in. A lot of those have doubled off the lows, but as they go higher, they're going to get a little bit more expensive. So this, what I'm showing right now on the screen is what is important for tomorrow. And this is what is priced into the market today. It's not an estimate. It's literally what's priced in today. And we've been watching this. You should be watching this as a trader. It's just cmegroup.com. Just, I don't know if you want to drop a link. Doesn't really matter. People should be able to find this. But over, I actually have this. Over like the last few weeks, we came in still pricing two rate cuts for the year, right? So this was rate cut number 1 here that was priced in for June, and then rate cut number 2 over here priced in for September. It's about 2 weeks ago. Then last week, we only have 1 rate cut priced in for the entire year. Actually, I think the year ends here, right? So this is where the year cuts off. So we had 2 cuts, then we have 1 cut here, and then the second cut a week ago. This is before CPI, before GDP came in, and now we've barely got a 40% probability that we get one in December, and the next one isn't actually priced until December of 2027. So why it's about commentary tomorrow, it's because this is what's current. Is it what's true? We don't know, but it is what is currently priced into the market. So commentary matters a lot, where if he says, you know, we're not really worried about inflation, it's going to be, what's his word? Transitory. Then
I don't want to hear that tomorrow. If he says transitory tomorrow, the market and the headlines are going to flip out, and he needs to stay away from that word. The worst thing Powell could do is back us into a corner. I don't know if Warsh, we don't know because we have a new Fed chair coming in May, but we don't want Warsh feeling like he's backed into a corner either. And if we don't get 2 or more rate cuts this year, you have a lot of debt rolling over that has to get refinanced.
Whole nother issue right there.
The housing market is not going to get unlocked. You still have people not moving. You still have mortgages too high. And corporate debt runs on 5 and 10 year cycles. What was 5 years ago? 2021. What was that? Coming out of COVID, rates were next to nothing. So is it better where it is now than where it was a year and a half ago? Yes, but it's still not low enough where earnings and profitability will be compressed if companies have to roll over debt at these levels if they borrowed 5 years ago, because the spread is significantly more. So it is incredibly important for oil to get back to the sweet spot of 55 to 65, because at that point,
I don't think we see that anytime soon. After we depleted the SPR, there's no shot that we're getting all the way back. It's not happening.
I'm not saying it's going to happen, but it's incredibly important that it gets back to that level. That is the sweet spot where everybody makes money.
A lot of money.
Wheels can turn smoothly. Without that, you're flirting with a very difficult economy. And
we were 40 for a while. I think realistically 75, 80 is where we kind of like level out for a while.
Probably. And look, the big thing now is you got Meta laying off 20% of the workforce. You got Block laying off 4,000 people. You got Morgan Stanley laying off 2%.
This is the unemployment piece. Yep.
Yeah. So now you add unemployment on top of it. Now you start getting the headlines of recession in a month or two popping up if oil doesn't come down, and if Powell's hawkish tomorrow, and then if another company comes out with layoffs, you wait. We will get recession fears starting in a month or two.
Yeah,
and that will make this a very hard market.
So this is the cycle for the the super technical people that aren't into fundamentals, that what he's talking about is we have essentially like the main market Goldilocks. Then we have an inflationary or reflationary cycle, and then we have a deflationary cycle or disinflation, right? Disinflationary, deflation, a little different, right? Well, the one that we don't like is stagflation, but stagflation is categorized exactly by weak growth, high unemployment, and persistent and high inflation, and that right there is the worry. So while it can have that stagflationary nuance at the moment, that's kind of what we're looking for. So if you want to see, we can have like high inflation, and that's okay if we're going to be in a reflationary situation, right? So like reflation meaning like there's some kind of policy stimulus or growth, really. Like we have the growth can overcome all of this. And in the meantime, I can't believe I'm getting to use all these old slides. Do I not have it here? Oh, I don't think I have it on this one. In the meantime, there's really like the I don't have it. Sectors that will do really well, but in that stagflation. Oh, look at that! Look at this. I'm like seemingly somewhat prepared.
I love it, and you didn't even know we were going to talk about this.
No. So like in a stagflationary economy, by the way, this is like 100-year give or take data set. The best trade, nearly the only trade, commodities and gold. What is the best performing stocks right now? And commodities where it's at, but equities don't do great. It's not horrible, but it's the roughest time for them. So those are the four kind of general cycles within the market, and we like to be in Goldilocks. So in order to get there, we don't actually have to have inflation come all the way down, but we do have to have growth come back up. So even if we have this high unemployment, it's very much about the relationship between interest or between inflation and GDP, which is going to dictate what the rest of the market people look at. So to that end, tomorrow's a big deal, because if this is overshot to the downside, like one good thing I'm looking at here is like, what can he say to make this work? Can he actually say anything to make this worse? I don't know.
Make it worse? Yes, he can say a lot of things to make it worse. Can he say things to calm people? He can. I don't think he's going to. I just think he's going to be hawkish, because why not at this point? He hates Trump. Trump hates him. He's leaving in 2 months. He's going to be hawkish. So.
I think I think in reality, everybody's, I don't know that he's going to be hawkish, because he's going to be worried about his legacy too, right? Like he doesn't want to be known as that guy. So I think he's going to want to leave it in a good spot for sure. And he is in a rock and a hard place. But worst case scenario, this one rate cut that we have priced in only at a 40% probability for December, by the way, gets ripped completely out of the forecast, right? That's worst case scenario. I think even if that's the case, I would rather have this Band-Aid ripped off sooner than later, quite frankly, to set me up for some better longs later, because they'll go ahead and overshoot this regardless. But this, I think it's already pushed out so far. And what I could say about the market, so back to the charts, the market really does want to go higher. I'll tell you what, I would have thought that this market would have come down significantly more a long time ago. Like at this point, we technically should be a lot lower. But again, we have a lot of reasons to go up. Also, generational data center build out. Record earnings, by the way, that's not changing. And there are a lot of good things to look forward to. So this is that kind of like whipsaw balance that we're dealing with. The biggest thing right now is from a technical perspective, we are not out of the weeds. So these lines here, I use fundamentals actually to create technical levels for me. And the biggest fundamental event that we get every month is what's the biggest fundamental event that we get every month, Steve?
Biggest fundamental event,
macro number. Yeah.
I mean, it depends what your opinion is. Some people would say
No,
GDP.
I want to know your opinion.
Some people would say GDP. Some people would say CPI. Some people would say PCE. I mean, I think it's a combination of several things. It's not just one number for me.
With GDP, we get revisions. So
and also unemployment's huge.
Okay, so I'm going to say NFP, which is unemployment or a flavor of NFP, right? Because that is how many jobs were taken the prior month, as long as we have current data. What I can tell you is that there's a little hack to the market that I've got over the years, and that is that when we do get non-farm payroll numbers, it's so important to the trend that it actually marks like a critical level. So here's just as an example, this is last February's non-farm payroll day, and most people don't tie technicals to fundamentals like this. We did a webinar about this just recently. People will probably remember it, but this is the day that we got that non-farm payrolls for February. 697 was the high, 689 was the low. 88% of the time, that day actually, in fact, marks the higher low for the entire month moving forward. Believe it or not, it's a crazy stat. You'll never find a better stat. And so within 1%, right? And so here we are on March. So what I can tell you is that this is definitively resistance right now. So something has to substantially change in the market sentiment fundamentally also for us to actually get over that. In the meantime, we don't have, this is our March NFP level. So we have a couple little wicks above and below. This is actually within my 1% kind of range on both ends, both of the high and the low. But I'm going to go ahead and add, this is just an indicator that we use. And if we do break down, the next stop is 651, right? And so I do not, unless we're over 678, which is the NFP low for March, we're just not going higher. And if we do get over that, then we're looking at 690s, mid 690s one more time. In the meantime, this is a definitive place to like sit and wait, because we're likely if we can't hold over 669, 670, because we're at support, this is support, the next level lower is the low 650s. So that's where we would go if we break down this week. So you'd honestly see that probably by next week as your target, and that's going to line up from a chart perspective. So that was a fundamental that would actually reprice us back to September of last year, which in fact may not be that bad. And that's going to line up right here with these kind of like what we call, when you see something like this on the chart where it's like big moves down that don't hold for very long, we call these like it's a funny word. A lot of traders call that, I don't want to say liquid, you might call it like liquidity, or like there's old buyers and market participants sitting here at this level, and they might, same thing like with Reddit, they might remember, oh, I bought here 650. It's a nice psychological round number. I'm not going to use the 200-day simple which is the red line, as support. It's just not that. In the meantime, it's more like a magnet. So if price is closer to this red line, which is the 200-day simple moving average, I know I'm on a 30-minute chart, but that is locked to the daily time frame, it's going to get kind of sucked into that, and it may overshoot, right? So it may overshoot something like this, and you might see something like that, and you'd be looking for this kind of scenario to hold at that point. So that's legitimately what I'm thinking. I don't see this going higher, and if it does, it's not gonna, it wouldn't be all-time highs, at least not this month. We'd have to see a substantial change so far, like in the rhetoric. There's too much worry in the market. So that's where we are on SPY. I could say also from like a daily range perspective or a weekly range perspective, an average week's range actually takes me to 680 to the upside on SPY. And I believe this, an average week's range on SPY average, we could see 650, and that would be an average move on the S&P 500 to drop 20 points from here over the last 18 weeks. That's about the average range that has moved. So that's kind of crazy, but that's SPY. Qs are very similar. I think the two charts that I usually run into after this, and then we can start running into other tickers, are IGV, which is kind of like in the forefront of, it's like the blast zone, right? This is the software sector, an ETF that tracks the software sector. It's kind of bottomed out, but it's not getting not a lot of love. This is at the first general area of support. We're doing okay. So this is the one where if this bounces, this is like your ServiceNows, this is your Salesforce, this is your really beat down software names right here. Not necessarily like a SoFi or FinTech, but specifically software like maybe CrowdStrike, Microsoft, Palantir, very heavy weighted components here. And then RSP is the other one, which kind of it's lost its general trend. This has been the market's kind of saving grace, which is the equal weighted S&P 500. So the combination of these two things, the deal is right now that we want to see these two ETFs, RSP and IGV, trade in sync in the same direction. So if both IGV and RSP are going higher, we basically are going to see all-time highs. Like if they're both going lower, no question, we're going to see 650 or below. If they're going in opposite directions, we're very much likely to be choppy or sideways, because it's still that broadening thesis underneath the market. That's what that's going to be. So whether it's IGV getting a bounce and some of that money rotating out of RSP into that sector, that's what we'll be seeing. Or if RSP is going back up, it's because right now a lot of software getting sold off again and going lower. So that's the kind of sentiment. And I think from there we could pick out some other stocks. I saw you put some others in there.
Yeah, let's do Nvidia because we have the conference, and selfishly, I have a ton of money in it. So
do you?
I have a bunch of money in Nvidia.
So Nvidia, I mean, Jensen's comment is getting digested right now. I think the one comment, GTC in a single line is we have sight to at least $1 trillion through 2027 in AI demand, and we'll probably be shorts. I think what he meant by that was that his estimate is going to be low, like he might be sandbagging. The market is expected Jensen to be like all sunshine and rainbows. So I don't think that was a big thing. It's a big number, but this is where I would have to lean on you, Steve, and say, what does that put this? So if Jensen's now saying 1 trillion in revenue through 2027, how different is that from the prior estimates? That's the biggest question.
It's actually, depending on how you interpret what he said, it's right on the money with the estimates, because the slide said 2025 through 2027. So you have to assume that's 3 fiscal years.
I think he's saying fiscal or like calendar 2027, not necessarily fiscal.
So
let's just say he's thinking like one out year.
Yeah. So, but look, think about it. On the slide from GTC, it said 1 trillion 2025 through 2027. So calendar. That would be 3 years worth of revenue, 1 trillion. Now, what Tanner said to me is that was just on the Vera Rubin. It wasn't Vera Rubin Ultra. It wasn't on anything else. So
I didn't hear that.
I don't know if that's true or not, but when I look at where the analysts have the revenue, they have 367 billion this year, 468 billion next year. So that's 850 right there.
So that's $1 trillion right there.
Well, that's 850, and then when you add in last year, it's roughly $1 trillion.
Okay, so we'll take the 850, right? I think that's. I think you could actually run with that. So the 850 is where we were before, right?
Yeah. So this year they're expected to do 367 billion, and then next year they're expected to do 468 billion. So that's roughly 850 right there.
So that's about 17% higher than what you're saying, give or take. I'm sorry, I'm really bad at math. I'm poor Asian, but that sounds like about give or take 15% increase. So I think best case scenario, legitimately, you could probably look for that because but this conversation is though, like, it sounds like such a big number, right? You're like, oh, it's $1 trillion in revenue. But the only thing that moves stocks is what's different is if something's different than what was already priced in. So if Steve, I'm going to trust in Steve that it was 850. I'm going to take the low number, 850 priced in already through 2027. Now we're saying at least $1 trillion, if not more. We'll just have to go with the trillion. And so that's about a 15% increase.
And the problem is we don't know if that's actually true or not, only because the slide specifically said 2025 through 2027. So does that mean 26, 27, or does that mean 25, 26, 27? So that's the question. Does he mean from the end of 25 to 27, which is 2 years, or is he including 2025?
So I think over the coming weeks that'll get cleaned up. I think he's gonna. His intention, the way I heard it, was that it was meant to be like, I'm gonna say this, but I'm not gonna tell you I'm sandbagging, but within the context of how I'm saying it and what I said before and what I said after, this is a sandbag number. So, but again, the market's taking that with a grain of salt. I think like best case, like you can see that 210 again, but not really a whole lot, and that's about 15%, 10 to 15% based on those fundamental numbers. Also, I have that with the chart, right? So I have all of that kind of lined up. Downside is the same. So the chart doesn't really go anywhere unless you're below 175. But I think fundamentally, if it's appropriately valued right now, which I think we could say it is, if the value should be at best case, I don't know, 10% higher, you can give it a 210 thereabouts kind of like price target, which means that this is not like the greatest discount here, but the lower it goes, it's a solid discount. You could get into that 210 area one more time pretty easily, but the market needs the appetite for it. So because of where we are, I think it's just the digesting of what's going on. As everybody floods out of GTC, which ends on Thursday, they'll go back to their offices and they'll talk to other people, and more information will start coming out over the coming weeks. But what I could say is like sub 170, under 170 down to like legit, 160. I just call it 160s. That's going to be your lower end support. This chart does not look good. At all from a technical perspective. It looks like a don't touch me chart, but that just means that I don't have a reason to go anywhere. It actually, I don't mean it looks bad. I just mean that it looks like a barcode. It's just going to go sideways, which is perfectly fine for a lot of people. I would be perfectly happy selling like upside 210 cover calls.
It's fine if you want to sell cover calls.
Yeah.
So when I look at the fundamentals of Nvidia, this is a stock that if it traded at 225 right now, it would still look cheap.
Yeah.
From the fundamentals.
If the market still has the appetite for the same forward PE kind of metrics, which is I think what's mostly in question.
It's the cheapest in the Mag 7 on a forward basis.
So again, it's why it's not coming down. I don't see a reason to say this is going to like the gulag by any means, at least not right now. If it was under 170, sure, but it's also not at a screaming discount here either. So I think it's pretty. So
where's the support line that we need to worry about?
So help me understand, for you, what would you worry about?
I mean, I'm not selling regardless unless something changes, but more if I want to start writing cash secured puts to get more, where's that support line that I would not want to go past?
123. It's a long ways down, but that's if all that. So the cash secured puts, I mean, I think technically, so what we do is we measure statistically from this low, which is 86, the relative low in April 2025, and then to the most recent high. A normal pullback is going to be about 50% measured pullback. That's pretty normal, typical. And that actually puts us puts it exactly at 150. So at 150, this pullback is actually 50% from here to here. 50% is an okay discount. It's not a screaming discount. It's very basic. It's what you expect to see most of the time. 135 is a discounted level. So if I got to 135, I would absolutely want to be selling cash secured puts. But if I wanted to do something like that right now, you would actually manufacture yourself a way to be able to be what we call put the stock with a cost basis of 135 or lower right now. So I don't know that you can do that just yet.
All right, so let's change it. What if you're going to write cover calls? What would you not want to go past?
165. And so I think right now you can easily write some covered calls at the 200 plus level and collect probably a significant sum. Not the near term stuff, but the market's not trending up either. So this is the perfect time to do things like this. I'd probably go to January, just swagging this at this point, 2027. And again, if you have an upside target of look, I could sell a $200 call for Jan 2027 and I collect $25 per share, which would give me an exit of $225 per share, which by the way, it's never traded at. That's probably a closer upside target anyways. And it protects about $25 of downside protection. So if this does happen, I'm actually protected down to here at the same time while manufacturing myself an exit up here. So if this happens, I'll probably just leave the call. Then I would start looking at selling puts down at 135.
Okay.
That's how I would do this right now. I would not be buying leaps or anything like that. And like this is going to be catalyst driven. So there's going to have to be some kind of crazy news event. It's not GTC. It have to be, there's things like, HIMS or whatever. You're not going to see something like that, like the HIMS chart getting the lawsuit dropped. You're not going to see that in the chart. Or Nebius. We should look at Nebius.
Yeah, while we go to Nebius, because that shot up yesterday and it came down today because they issued shares just like they should have.
Just like agreed, right? So this is Nebius. This has been like a beautiful premium seller stock right here. You're not going to see this move or like this kind of a news headline, this whatever, from 112 to 135. You're not going to see that in a chart. That's a catalyst thing. You just have to know the stock. And what I know right now is that this is historical resistance. Two things going on, right? So one, Nebius, I think people own Nebius for this kind of event, right? Like the first deal with Microsoft cracked them like way over here, like from 60 to 100 something. And I think we could look at this time in history as what to generally expect. And I don't think that this is going to be the last deal for Nebius. It might be the last one that they announce for a little bit until they announce another, deal with some other hyperscaler. You still have Amazon, you still have Google to go. So those are probably coming, those announcements. But in the meantime, they do need to raise money. So you expect this kind of stuff. 108 was prior resistance here, right here. And so what I'd like to see out of Nebius is this actually come back and hold 108 for a while and create a new base, at which point I think you could expect that to actually hold. So 108 was prior resistance, and that would ideally be future support. If I just took, from this low, even from here, it's about 100. I don't think it's from there, but like from this very recent low, as close to 100 as you can. If it's holding that area, I think that becomes the next, in the best case scenario, around $100 becomes the next area of support, which would be a higher low. But net, this is actually still kind of stuck in this sideways pattern. So this one is more equity, or if you do like a Chris Patel flavored situation, I actually have some leap spreads on this because it's going to be a high flyer, right? You're going to get a big headline, and that's expect them to raise on you. But if you like the storyline, this is in a sector where, again, there's no question. The market's not questioning whether or not they're actually spending on the data centers. Nebius I like because it's more global versus the others. They all kind of have this little flavor that reminds me of the old crypto miners, which I'm not a big fan of. But anyways, it'll just be a trust and transparency thing from here. But I would assume that there's more deals coming along with more dilution.
So how about CoreWeave? A lot of people look at those in the same respect.
So CoreWeave, I think, can get squeezy, but I would have to lean on you again for the fundamentals. Like, is this expensive or cheap? And that
I bought Nebius instead of CoreWeave because the balance sheet was so much freaking better.
So did I. Well, that's not why I did, but I did do Nebius instead of CoreWeave. But CoreWeave had some things on the private credit thing way back when. Early, anyways. So that kind of kept me away. This, I think you're okay to nibble at CoreWeave. I just don't know if it's like super expensive or not. And I think that's the biggest issue for me. You got Seeking Alpha over there, right?
I do.
And there's no earnings. It's negative 2.5 EPS trailing 12 months. How would we even value this?
I mean, it's a $45 billion market cap, and they're not expected to be profitable until 2028. Huge revenue growth this year and next year, 142% this year, 86% next year. The problem I had with CoreWeave over Nebius is when I look at the long-term debt, they had almost 15 billion of long-term debt on the balance sheet, and they're burning through cash. They've never turned a profit. Nebius just fundamentally looked better. And then you have the investments on the balance sheet, ClickHouse and the other stuff.
Yeah, EV to EBITDA 29.46. Wow. I feel like it's getting more expensive. Is that right? Like, as I'm looking at these numbers, is it getting more expensive? That's wild. This one, look, so 65, 70 bucks was support. I think coming into GTC, this would have just been like a trade. Like, is Jensen going to mention CoreWeave? 90% probability he does mention CoreWeave. So from a sentiment perspective, GTC is pretty much over. He didn't really say anything great about CoreWeave. He didn't make, at least that I saw so far, any like big effort to go out of his way to talk about CoreWeave. So it's not that we don't think that Jensen, the AI sugar daddy, doesn't love CoreWeave anymore, but maybe he has some new friends named Nebius, and that's just the kind of shiny coin at the moment.
So I need you to do a chart. So one of my friends texted me. Her daughter wants to buy a drone company. And Dookie Pie mentioned the same exact company in chat, ONDS.
Ondas?
I know nothing about this freaking company.
It's a drone company.
Yeah, one of the websites, a drone company. They're buying some Israeli defense company.
You don't know Ondas?
No.
Do you know Kratos?
I've heard of it. I've never looked at it.
So the other thing so CoreWeave, just to tie off on this, you actually have to go all the way back to IPO. And so like the IPO high at post IPO, the first trade high is like 65 bucks. So that $65 high is acting as your general support right now. If it loses that, you can go significantly deeper. I just don't know if it's cheap or expensive right now. And this will trade based off of sentiment, very much so. So you have to be very close to the sentiment. I can't speak to the fundamentals. Steve's not telling me it's cheap, so it doesn't sound like it is.
It's not.
Okay, so he's telling me it's expensive, so it could be freaking, SMCI 2.0. Who knows? Ondas, Ondas is okay. So what I would say is that Ondas, we've had this. This is the chart of Ondas. Right here, right now, they're going to report earnings, I think tomorrow. I believe tomorrow.
Do they really?
Yeah. So first of all, you don't want to like gamble on earnings typically. And this comes back to
next week. They're doing 325.
325?
Yeah. Okay.
This comes back to like, are you gambling or what are we doing here? This is going to be insanely expensive. So it has to have continued momentum. And I believe it's going to be very expensive. Technically speaking, it's perfectly sound. It's in an okay place, meaning it's not in an at-risk place. It doesn't have the issue of being like at risk from like the software thing or any of that kind of stuff. It might have a hard time getting funding if we have a private credit crisis. But it is defensive, as in like drones defense stock. So the issue then becomes, well, if there's a ceasefire, the appetite for these kind of things might go away. And so what valuation might be propped up now might have some kind of war premium priced in at some flavor. So those are my kind of warnings here. Technically speaking, 16 plus is where it should go. You could actually see $18, 18 and a half from here, which represents a pretty good trade. 60% from here. On a stock like this with what we call like a low float, like $5 billion market cap, it's not hard for that kind of stock to do this, but don't expect it to hold and don't expect it to be the next Palantir either. So it's more a trading entity, or if you just hold it long term, cool, but like just nibble at it and you wouldn't sell it at $18 long term anyways. You would just kind of let the longer term thesis play out, that they'll become a prime if that's in the card. So the stock like this, I think you do have to look at. It's very much about contracts, like the government contracts. Who's ramping? Are they able to take out? Is the government going to bid a larger contract, like run a larger RFP? And is Ondas like on the docket or going to be bidding on said RFP, which you know a lot about, right?
Yep. All right. How about Microsoft?
Steve, I have a question.
Yes.
When you run an RFP.
Yes.
Wait, do people know where you work?
No.
Great. Don't ever tell them, because I want to ask you a question. If they knew, then you wouldn't be able to tell me. When you run an RFP, do you before it closes or before you even open it, do you already know who's going to win?
No.
Really?
No.
Are you in procurement or are you helping?
No, I am the person who runs the RFP. So I will tell you this.
You don't know who's going to win before you list the RFP, before you even open it up?
No.
Dude.
No. I mean,
I never bid on an RFP if I didn't know I was going to win.
So you may be talking about an RFQ, not an I mean, so,
nah.
Okay, so when you're going to bid, I get that, but that's not what I'm normally doing. So you got to think about it like this.
RFQ is to build the RFP.
When I build the RFP and I call up all the vendors, and I talk to all the reps and I get the regional directors on the phone and I put it out. So for our ERP system, okay?
Yeah.
I'm thinking about how much I can actually say. What I will say is the 4 largest ERP vendors were in it, along with another 8 companies, because we looked at HRIS systems and ERP systems.
Yeah, so that's a perfect example.
HRIS, and we looked at full ERP suites. We had no idea who we were going with, and here's why. When that RFP took about 6 to 8 months, and we had HR, we had finance, and in finance we had the different silos. You had payroll, you had accounts payable, you had budgets, you had GL, you had learning and talent. There were all different things, and we had to make sure that every module worked well. It was a 6 to 8 month process. I had no idea. And look, the way I run it, I'm not the subject matter expert. Okay. I'm the one running it. So I
got it. You don't know.
No. Okay. Like there's certain things when you're going through the demos and everything. One company may be stronger in one area where another one may be stronger in another one. There's a lot of things that come down. And then if you have 2 that are neck and neck, then it comes down to terms and pricing.
Right. I think so. For people that don't know, RFP means like request for proposal. RFQ means request for quote. So it's like if you have a big job, usually the process to do a multi-million-dollar contract, talking tens, 20s of millions of dollars contract.
It's a lot of time and effort on the vendor's part to go through.
Yeah, it took so much time for us to even put the proposal together. It's like I'm not wasting my time unless I know
you would love me.
No, I don't think.
Most RFPs. I only put 20 questions. Now, for the ERP one, I had a lot. But a lot of them, my philosophy is if I have to ask you to answer 100 or 200 questions in an RFP packet, you don't know what you're doing. Like I should be able to get everything I need out of you in a face-to-face meeting.
Look, I did even for governments. I would go, we had one RFP I can remember was upgrade an entire school district's network, including Wi-Fi and switching, which means that I need the entire blueprint for a district, not one campus, a district of schools, every building on the schools, like draw up blueprints, put them all out there. That's a lot of work. Get all the quotes, all the services, like turnkey solution. That was like multi-months, probably 20 people or more just to put everything together. It's a lot of work. So I mean, like, we would want to know. That's why I asked. So anyway,
yeah, I mean, look, when we did it for construction for a new office, I didn't know what construction company was going to win. And I'm talking 75,000 square feet in the middle of New York City, like soup to nuts.
Yeah.
And those are big freaking jobs.
Why are these guys shorting? Who's shorting Iren for the next few months?
So let's go to
RFP government, RV, the worst.
Let's do Microsoft.
Oh yeah, you said Microsoft. So I like Microsoft in general. So this is what's weird right now. Like, if you like Microsoft as an investment, go ahead and start dollar cost averaging.
I bought more today.
Yeah, at a slow snail's pace, and hope to God that it goes lower. Does it go lower? I don't know, right? Like it's possible, but I don't have a reason for it to go lower now. The net, like it's right here, literally right here, right now. This is your dollar cost average spot. Shoot one shot or however many shots you have planned, and then wait a few months, but don't add again until you're like sub 350, like it could go 370, but in this general area over here, right now, you can go ahead and like DCA, dollar cost average, in this between under 400, anytime it's around 400, it doesn't even matter. I wouldn't even, on Microsoft, I wouldn't even be that concerned about it. Like this is one I could buy and just like really not worry about it and pray to God it goes lower because I'm perfectly happy. But I would, if I saw another dip, I would buy it again at 350 after doing this general area. So 350 or sub 350, sorry. This is 2021 all-time high and 2023 area of support. So this is, it's below 350. I'm using very round numbers for Microsoft because it's over the years, what I will say is that Microsoft, you can be really explicit about a lot of things, but Microsoft is one that doesn't always give you the best discounts. When you get good discounts, it's usually less discount. In the pandemic, Microsoft was the first Mag 7 to recover, and it was the smallest dip of all the Mag 7s also, just FYI. So from a long-term perspective, it does have a pretty good premium, and I don't think it's going to lose that premium even amidst all this IGV software shenanigans. I think if anybody, this is my fundamental thesis, if anybody ends up buying out some of these lower tier software companies, Microsoft's probably going to be the one company that has the cash flow and cash on hand to actually do it. So from a sustainability perspective, I'm not worried about Microsoft. It's just a question of the PE compression, which is what we're dealing with right now. So sub 400, as close to 370 as you can, if you see it. I don't know that we'll ever see that right now. If the bottom falls out, then that's closer to 335 on Microsoft, which again, I really like. Here now, the reason it is an initial like DCA is because this broader chart, and this is a very long chart. I mean, It's a great looking chart. This is actually at the bottom of what we call like a trend line. So this green line, I'm just connecting this low, this low. This is the trend line right here. People will talk about this area right here from a chart perspective and say, oh, this is what we call like a double top. It is, in fact, a double top. But when we have a pattern like this, we actually have measured moves. So that is actually like 1, 2, 3 times the consolidation area. That double top has already played out. So I don't need to worry about that anymore. What I'm looking for on Microsoft is this to really start to consolidate. And this very near-term setup with earnings coming around the corner at the end of April, quite frankly, I think this is going to be the first one to kind of spring from here. This is a pretty good technical near-term setup. We're creating a little bit of a base, about 40 days sideways. And if I pull this to the left, I do like this. I do like this quite a bit. What I don't have is I don't have a reason to say it's happening right now, right? So right now, it's not happening. It is preparing to happen. So this is more like accumulation area here. Like that's
more. I think Microsoft is so undervalued here.
I like it a long time. So like this one, what I would say is like near term, I could easily see 415. Sorry. This white line here is this top kind of connected also. So in between this little area is building something we call a squeeze. So I think there's all that says is that a bigger move is potentially coming. But I need a reason for it to come. This can go up to 414 and still be in this general downtrend and not go anywhere. It's not until it's over like 415, this orange line right here. If it does really get through that, then I know that the squeeze is on and we're actually going to the upside, and I should see at least 470 before September, like before we go through the summer. Until then, I think this is going to build support. And if you get those, what we call like those quick wicks or quick like flush out moments, I think 370 is 380, 370 is where that low end would be. I don't see this going below that right now without like a more catastrophic issue. But the longer this goes sideways and builds a new base, I think is perfectly fine. Just for historical context here, this was about 70 days going sideways before it was able to break out. This here is about 143 days going sideways. Down here, this is about 162 days. We are 40 days in. So this consolidation period, it's really kind of just starting, but we're going to have earnings. I think the sentiment will probably push it up a little bit, hopefully. I don't know. But I would plan for at least another 100 days of general consolidation before something's really ready to move on this, which in the grand scheme of things is really not that much.
All right. So before we go on to the next stock, I did not see GTC today, but Amit got to ask Jensen another question.
Nice.
Just wanted to put that out there. Amit is doing good things out in California.
Did you play it? Play it.
You want? We should play it. All right.
I want to play it.
Retail investor. The market has really started to question the value proposition for legacy software companies over the past few months, and with the rise of agentic workflows, many people think these platforms can be vibe coded away. I'm curious how you see AI working with those software companies to prove that they will be valuable for your stuff.
Yeah, and so please tell the retail investors they're just absolutely wrong. And it's not even my business to protect them. You know, but right is right and wrong is wrong. Let's just use one example. Synopsys, okay, or Cadence, or any of the design tools. The limit of their business is butts on seats. There are only so many engineers. If there were more engineers, they license more tools. If there were more plumbers, you get sell more tools. If there were more carpenters, you would sell more tools.
I have a hard time hearing it. It's kind of low.
It's a long
clip. I didn't realize it was that long.
It, but he basically asked Jensen if software companies are going to give vibe coded away, and Jensen said it's absolutely not happening.
So, vibe coded away.
Yes.
Dude, I'll tell you when I talked to Amit and I think a couple of the crew got to ask questions too while they're out here. I think that's like a nerve-wracking scenario because growing up, they tell you in school by the way, the biggest, I don't know why they do in school. They're like, there's no such thing as a stupid question, bro. In real life, there are very stupid questions and you cannot do that in real life. And so I think it makes them nervous.
Let's move to Salesforce.
Wait, someone asked me about seasonality and we didn't really talk about it.
Okay.
And they asked me if I follow this seasonal trend. You talked about a 5-year cycle. So in the stock market, there's a 4-year cycle. So this is the other headwind. So this is, by the way, dude, this paper gains Jason guy comes prepared clutch every time. I don't understand. But this is a 4-year cycle. His presidential cycle is the way that it rolls. And so you have year 1, year 2, year 3, and year 4. So we are here, right? March, year 2. We are here. Here's what I mean by this is a funky situation in the market where historically speaking, seasonally speaking, we should get a little pop. We should sell off for the rest of the year. Seasonally speaking, and that actually goes through September. And I always joke about this. I call it the eating season. So if you do your annual DCAs, you usually do it between February and March and also September, October. Your semi-annual dollar cost average, the S&P 500 index. Those are your best times to do it. This means if we are in year 2, right? Get this. This means that I wish that we dump really bad into Q4 because that is the dip to buy on the typical market cycle. And regardless, anything that you buy in this area, if I have a 3 to 5 year time horizon, listen, this is year 3 in the cycle, this is year 4, and it's like, do you think I really care? Right? From an investing perspective, like if we're, hood at 75 or 45, you really shouldn't. If you have, this is how you do it, right? So this is year 1, year 2, year 3. There's my 3 years. I'm going to be like, if I have that kind of time horizon, I'm good to go, right? And I can dollar cost average from here down through the end of the year and pray to God that I get better prices. Maybe I do, maybe I don't. But if you have that type of thinking, time heals many things. In this scenario, this dip could be aggressive, but it is the dip to buy in the seasonal like cycle of the market. So that's my gut. Well, that's my feeling. That's from investor trading perspective. That means I can trade short near term, but seasonally speaking, yeah, I like it, but I like it lower also. But you don't want to think about it. You want to think about that way, glass half full, not glass half empty. Yes, we can come down lower, but if you're not going to sell it, do you want to be, this is where you want to have a lot of cash kind of collected, because the dips this Black Friday, I'm going Black Friday shopping in the market. Like, I'm not going Black Friday shopping in the mall. It's happening in the market this year. And that's like the plan.
Okay. So Salesforce, Benioff had $25 billion buyback that he's commencing.
I don't know how I feel about this. So that initiated right away. Last time we talked about this, I think we jokingly said this thing wants 150. If we do get the Black Friday sale, it's probably going to be 150, but I'm not sure. And this is what makes it hard for Nvidia too. I think Nvidia just announced something similar where they're going to be, you're going to see a lot of companies starting to say, we're going to invest back into the investors, give cash back to the investors via, it'll end up being via dividends. The transition, dividends or buybacks, the transition as we go from like mega growth to financial shenanigans, isn't always the greatest, but that, you know what it reminds me of, Steve? This price action, you would think that that's more bullish. I'm really trying to bite my tongue and not say it, but it reminds me of PayPal.
Don't compare the two. You're not wrong, but don't compare the two, because PayPal has mid-single-digit growth.
I'm not saying
Salesforce is around 10%.
PayPal. Yeah, but I'm saying that like
you're not wrong though. A lot of people think Salesforce is PayPal.
Well, I don't think Salesforce is PayPal, but the sentiment around that, you know, when PayPal started doing it, initially you're like, oh, that's cool and all, right? And then you start thinking about it a little bit more, and then you're like, well, is that in fact the best use of the money that you can find? Is your job as a CEO is to allocate capital in the most efficient way possible, right? And or one of the main jobs. But like, if from a capital allocation right now, that's basically telling me everything's overly expensive and that's the best use of the money. I'm not sure. Well, the market's not really excited about that idea right now. I think long term it'll play out, but short term, I don't think it's moving. Well, short term, it's not moving the stock. We can see that, right? So we're still stuck. If you bought it already, don't sell it. Don't do anything. Wait for lower. If you get it, you know, hopefully you're good. This one I think is going to be, look, Salesforce is ultra sticky in the enterprise. It's not a question about that. It's a question about what is the premium that I'm going to pay on the growth. I think CRM, similar to Microsoft, ends up, you know, standing the test of time. But in the meantime, it can go lower, and it does look like it actually still wants to go a little bit lower, and I would say closer to that 150, unless there's a headline that changes this. If this is over 220, then the chart is starting to break out of its downtrend. But if it's not trading over 220, it's still firmly in a downtrend, and you should be more cautious than optimistic and plan on more like dollar cost averaging when a price gives you a substantial discount on your cost basis, or makes an actual impact on your cost basis. Not just because, but like I still love it. I'm going to plan to allocate probably more than what I did before. But yeah, I think this one, it's got more work to do. But over 220, if it's trending over 220, then you're just right. Like, make a mental note, over 220, you're looking a hell of a lot better. and what that would mean from the chart perspective, that the market is now giving it a little bit more of a premium at that point in time.
So what about ServiceNow, another SaaS company?
So all of these, you kind of want to look. That's why I said one of the most important charts is IGV, the sector right now, because I think, it's the thing right now is that you can maybe pick out one or two, right? But these are like I just used an analogy the other day. It was like, if the stock is like, it's a boat in the ocean, like the boat could be doing good. But if all the boats are swimming against the current, or like, super choppy seas outside, I might even be like in a 5-star, speedboat. But like, if I'm going against the current, I'm my Robinhood and crazy choppy seas, it's going to be rough going for a while. And I should expect that. So like ServiceNow, I think would probably be very much there. I don't think it's not a question of whether or not these are necessarily going to survive, but it's like they're in the blast radius. ServiceNow more than Salesforce is smaller, but it is equally. It's not nearly it's not nearly as sticky as Salesforce, but it is heavily embedded in the enterprise. This one, I think it's higher beta, so it's probably gonna show you first, since Salesforce is so low beta alpha, like moves with the current, right? Moves with the IGV sector more. You could trade against this like 105 near term level, which does give you like a pretty solid long-term support area, but that support area goes down to like the mid to low 80s. So it's a generalized zone, and that zone is here on my chart. It moves around when I scroll, but it is. Look at that. So it's a very large generalized zone. It's this whole thing right here. Like if I change the color so you guys can see this a little bit more. There's a lot going on over here. So that goes to like 80, mid to low 80s right in here. This one, similarly, if it's over 135, it's coming out of the downtrend. But make no mistake, it is definitively in a downtrend right now. So you have to be aware of that.
So how about SoFi? A lot of people asking for it.
What happened today? Oh, muddy water.
Short report came out.
Yeah. I
didn't read it. Started rebounding.
So the market is like on edge. Like SoFi is so funny. Just like so many stocks right now, you can look at them in the morning. It's like they really look like they want to go, but by the end of the day, you're like, you look back and you're like, wait, what just happened, guys? Like, weren't you somewhere else earlier? And I think that's kind of like underlying sentiment. Even like when we have the ceasefire kind of headlines that go around in the market, it's like you see some pretty heavy moves. And so it makes it hard to be short, because like the market does, I believe, want to go up. But there's just so much stuff in the meantime that we still have to worry about.
Wait, did Noto buy today?
I think he did also.
Oh shit. So he basically said
he already bought though recently too.
Yeah, but he basically said F you to the short report.
Yeah. But he's done that his whole career. What I'd say is like it's sub 15, as close to 14 as you can near term. It's gonna try, like if it doesn't go down further right away, that's actually kind of bullish. Tomorrow will tell. Noto's not gonna be able to prop up the entire stock. We know that. Again, if you have a long enough time horizon, it's all good, right? Like it's all good. I will caution that with like, this is not the market to be buying leap options. It's not that market right now. Like we're not there. We have a lot of headwinds. Don't do it, right? You're going to lose all your money, all of it. But 16 is this bare bones, like first real tag of support right in here. But it goes 16 to 14 for the general area right in here. So this is your support coming back from this time over here. And so between 16 to 14, that's your support level. You don't want to see it in this area for very long, quite frankly. But this literally right here, right now, where he's buying is the equivalent of, remember when I was talking about, I don't remember what Microsoft maybe, when I was like measuring, you measure from here, from the lows to the highs, and then 50% is a good discount. 50% is $20.67, measuring from the $8 lows of 2025 up to the $32 high of 2025. God, that's what a range for the stock. That's 50%, which is okay. That's standard. A better discount is right in here, literally where it is, right here, right now. So I don't hate it here, but just know it does go lower. You don't want to see this much lower than that, though. Much lower than that, you're going all the way back, and that's like you don't want to mess around with that.
Do you think it goes lower from the way the chart it looks?
No. So I think that the way the chart works, it could, but not for, like I said, not for a long period of time. I think it's okay to get pushed down periodically like that, like this, but quickly bought up. And while it's being bought up, you expect to be frustrated sideways for a while. Honestly, this is healthy. Like if a chart does this is actually pretty healthy, and you're building a net new investor base while that's happening. So like this kind of like whoosh sideways, that's good, right? In this area, that's actually pretty good. So a violent dip that's short-lived to 14, that's where I'd be like, all right, drop what I'm doing. Let me go snag some of this. But if it's trending below that area, no, I don't want it, because you're going all the way back sub 10, technically speaking.
Okay. What about Robinhood?
I heard you put out a short report on SoFi, though.
No, I've just been saying that they need to get into business banking, wealth management. They need to become custodial of 401ks and get the tech platform going with powering their competitors' banking systems. But what do I know?
Yeah, I don't know. I think what about Basel III? That's the end of this month, right?
Sure. I have no idea what that is.
Oh, you're an analyst. It's the 100 billion. It's the Connie's in the chat. She'll tell you all about it. It's about like you can look it up. Chat GPT it. So
just tell me what it is.
Banks that hold over $100 billion in assets are going to have
the freaking yes. Okay.
A new set of like parameters to follow. But
yeah, there's a whole regulatory thing once you get over 100 billion. Yes.
Yeah, and so I think that's why he was raising cash, so he could meet those requirements and things the whole time. I honestly think it was part of that, and I think are they going to qualify for that? Because they technically you don't want to be in that cohort of
it comes with a lot more expenses on compliance, I can tell you that.
Exactly, right? So that is a bit of a headwind. I will say when we look at things like JPMorgan, they're already down a bit. So like when it comes out, I don't think there's anything that's not necessarily priced in or not priced in per se, because I think it's supposed to come out any minute or the end of the month rather. But if something changes or it gets pushed out, that would actually be good for some of these financials, because I think that headwind is already reflected in some of these stock prices, so they could get a little bouncy.
Yeah, they're nowhere. SoFi's nowhere near the 100 billion cap.
So then that would be a good thing for them.
Yeah, I mean they only have 23 billion in loans held for sale. They have 37 billion in interest-bearing deposits. Their total assets are 50 billion. They're nowhere near.
Oh, yeah, you're good. So it might be good for them.
So we got a couple of chats asking for RCL and Venture Global.
I saw it. So RCL is Royal Caribbean. That's your best of breed cruise liner. What I would say is look at it's. I'm not going to pull up the RCL chart just yet, but I want you to look at the Delta chart because this is the one that just reported. So a lot of these, it is about the consumer, but it's not about the consumer. It's actually about gas and their cost of doing business. So if you're bearish, here's a hot take. If you're bearish on oil, you think it's coming down sooner than later. It's not. It's a horrible trade to try and short oil. That's like trying to buy GameStop puts at 350. Even if you get $100 downside move, you're going to lose all your money anyways because options are too expensive. But the travel stocks are probably your best counterintuitive bet because a lot of them had come down because of fuel expenses and things like that. So if oil does come down, you can pick with some of your best of breeds, like an RCL, like a Delta. It's not Boeing, it's different. Boeing's a turnaround story. It's probably a better situation. I believe Delta just reported also clearly better than expected. And it's still firmly in it's about to reclaim its uptrend. So hopefully I don't have to put my foot in my mouth. I didn't look at this chart today. So that was my sentiment. Yeah, it's I would actually say the same. So RCL, if you like it, this is what we do is like we kind of say you connect these lows. Like I have a tool where it's a drawing tool, and I'll just kind of connect a handful of these lows, and we kind of in an angle. So like 1, 2, 3. I grab this one, and you see this one. This is what we call like a trend line. One thing about trend lines, by the way, I've zoomed out quite a bit. This is on I have a lot of what we call data on the chart. So this is looking back to October 2023 to today. So a handful, multiple years I'm looking at right now. This is at what we say trend support. So this is actually where you would, assuming there's nothing wrong with the company, want to start nibbling at it as close to 270 as possible. And it just came off that level. So it's perfectly fine. If you're a long-term investor on this, again, this is the best cruise line. If you like cruise lines, I don't think that's changing anytime soon. It's a different situation than CCL or NCLH or any of the others. Yeah, this is the one that you would have wanted to buy in the actual pandemic. That made the move. So I don't have a problem with this at all. I think it has an extra little headwind, like tailwind, sorry. If oil prices do come down, it's actually probably good for the stock in that case.
Okay.
But until then, it's still going to be slightly lower. But Delta is a good showing for that sentiment. You should look at United. Yeah, look at it. So United makes this big old move. The airlines are going to be, big old move off that. Chris at CCL. CCL reports to the end of the month. So it's all the way back again. Ooh, I don't know how I feel about this. This could go lower. I don't know. It is summertime. You know, it's going to be 80 degrees. It's going to be more than 80 degrees out here.
When?
Right now.
Are you serious?
Oh my God.
It's freaking freezing outside.
Oh shit. No, dude. This is inverted. You see that?
Oh my God. Get out of here.
Not a joke, bro.
I need to bring shorts when I come out to Cali?
Yes. Flip-flops also.
Oh my God.
It usually rains when Amit comes, but it's not raining today. End of March, April showers bring May flowers, right? So maybe it'll rain. I don't know. You'd have to. It's warm, but it's warm. It's not cold. It's actually hot.
Okay. I'm going to have to change my strategy for the clothes I pack. I was going to pack different type of clothes.
You can still pack the same clothes, man. Wear whichever you want to wear.
All right. All right. Let's do a couple more.
Yeah.
I'm actually not bringing any suits with me out to California.
Do not. What?
No.
In what world would you want to wear a suit?
Exactly. I'm not packing any suits.
You know, Amit is going to show up to the event in his staple socks and flip-flop attire.
If he wears socks and flip-flops together, I'm going to scream.
Why?
It's not allowed.
Dude, that's like his thing. It's like how you know it's Amit. Right?
I don't even think I'm going to pack a sports jacket.
It's the socks. Look, shorts. Ooh. It's a very X-rated stream now. Shorts. But you got to have the socks all the way up. All right, they're getting mad. They want me to look at Iren.
Crazy.
I look at Iren. Iren, I had this on our side. It's not. It's close. I think I want to see Iren holding over 45. If it's holding over, it's not there. I have not issued like this. This is going to happen. I think it's okay, but it could do this technically speaking. Below 41, you don't want it. Below 41, she gone to 33s. But that is the Iren chart. All right, I've taken care of them, so they're not yelling at us.
Okay.
I already had it on deck. Let's
do Micron next since we were talking about it before.
Moo, the fat cow, man. This thing is just getting fatter every time I look at it. It looks
Jesus,
great.
look
dude.
at that damn chart.
It's the
Look at
greatest.
that.
It's the greatest. I mean, I feel like Micron's just
Oof.
okay. I've shorted Micron a couple times, done okay, but like it's not done doing that. Like this is crazy. And what's the PE here?
I'm bringing it up right now. And this is crazy.
This is the crazy.
It's trading at 12 times earnings.
Oh my God. So that's like, okay, so I have to keep thinking right now, is it really trading 12 times earnings?
Yeah, this year, 12 times.
So, dude,
You
would
ready
you
for what it's
rather,
trading at next year?
without looking at a chart,
Yeah.
without looking at a chart, you're just looking at spreadsheets, just fundamentals. Would you rather Micron or Nvidia?
I will tell you right now,
Just not charts, just fundamentals.
Micron is a freaking at these levels, without looking at the chart, without thinking about
What do you mean
price.
at these levels? You can't say that at these valuations.
No. Knowing that it's gone up, I'm going to put all that out.
You can't know that. We're not.
Yeah, buy
it
us
doesn't
out.
matter where the stock is coming from.
We're
It only
taking
matters
yours
where it's
down.
going.
And we're putting mine up. So I have
Would
so
you
many
rather?
damn tabs open.
I feel like this is a real question. Would you rather Micron or Nvidia? Strictly based on the fundamentals.
I mean, would you rather company
Dude,
A?
your screen has lines on it. I thought you didn't do TA. What are these lines?
That's not me. That's not me. That's earnings consensus.
They want to
So
pull.
company A
Maddie.
is expected to grow 340% this year and 55% next year on earnings. Trades at 12 times and then 7 times. And you got 29, 28 analysts. And then on revenue, over 100% revenue growth this year, around 37.5% next year. Or company B, and this is where company B gets interesting. You had a drop off in year 3. You don't have a drop off in year 3.
Company B is Nvidia.
What?
Company B is Nvidia.
No, company B is Nvidia, yeah.
Had a drop off.
No, company A has a drop off in year 3. Company B doesn't. Based on the numbers, Micron's a much better buy today.
There you go. Well, so
there's just no
tomorrow.
question about it.
So okay, here's the next question. They report earnings tomorrow. What if it becomes a better buy tomorrow?
You know what the problem with it is? DRAM is historically a boom bust cycle.
Just so are semis. You remember when they had the accounting issue? Micron?
But,
Do you remember? The thing went from like $90 to like $45 for like 3 years. It was $150. Accounting issue.
Scary is
Accounting
that?
issue here. 50.
What if Jensen's correct?
That's my point.
And what if the analysts are wrong about year 3 for Micron?
This
Because if
is
Jensen's
you
correct,
do
everyone's
realize
a lot
this
more
is your
random.
thesis, right?
Yeah,
So how much Micron do you own?
0.
Why don't you take a little Nvidia money?
Yet I took it in the stock draft.
Oh, I mean
How
that's
crazy is
legit.
that? I put it in my 10 companies for the stock draft, and I don't even own it.
I mean, thank God Amit didn't own Duolingo. So there's that.
Why do people like that company? I think it's one of the stupidest companies.
Did you see that? Did you see the Apple AirPods release today? $500 AirPods, the new
No,
ones.
they put new ones out.
Yeah, the Duolingo killers is what they're called.
Are they?
Yeah,
Maybe I'll buy them just because.
they released they got the AI built in.
So I can just hear what people are saying around me.
I mean, in other languages, no less,
That's amazing.
isn't it? Okay, so the Moo chart, the cow is out of control, right? So right now, there's a little bit
Where
of
does
a.
the chart say this thing can actually go?
I'm gonna tell you right now. So it's poking its little itty bitty head out here. Now, mind you, earnings comes. So remember the series of the way that you look at this. Fundamentals tell you what stocks to choose to trade and buy and own. Technicals will tell you when to get in and get out and how far they can go, the forecast. And then sentiment will tell you how much momentum they can or cannot have. So sentiment we know is good to go, right? It's fundamentally, believe it or not, I have a hard time understanding just by looking at the chart, but apparently Steve's saying it's cheap. And I think that's what the market's also saying. Cheaper than a lot. It's so wild to me, but fine. When it gets fully valued, it's probably a sell, right? I think that's how these things tend to go because they are cyclical. But if this were to do this, how this works is really we take this consolidation, just a green box, and you double it. That's what we call a measured move.
Ooh.
That doubling takes it to just under 550. That's how this works. And you know that that's happening if post earnings it's holding over 455. So it's another $100 of upside on a what we call a measured move for Micron from here if this goes. And it doesn't have to stop there, but that's where you would typically do this. So usually, just like when we're measuring these pullbacks, you have like a halfway point. So your halfway point is about 515, and then your full extension is about 550. You could triple the extension to 650. It's possible. That would also be within reason, but typically you only expect to double it, and if you get more than double, then you're kind of just lucky. But this is what that says. What's my PE at 550, Steve?
I mean, it's trading at 12 now, like 9 if their EPS doesn't change, but they're likely to raise guidance. So the analysts are probably going to price in more EPS. So I have no idea.
As long as they don't say we're going to run out. If they say we're running out, then it's,
I mean, they've continuously increased EPS along the way with it going up. That's why it's still trading at a 12 PE. I mean, that's the big thing. If they didn't keep raising guidance, this thing would be trading at like 80 times.
Which would probably be a sell. But I mean, so at 650, is it still fully valued at 650? I have 650 on the chart, right? That's what I'm telling you. I have it there. It's 40. Is that like over the top valuation if nothing changed?
Let's do some quick math.
Yeah, because and then the math will tell us, is that the sell? Like, I'm going to sell it. I don't know. If I'm long, first of all, if you're already long, there's no reason to sell this. They're saying 650 is still cheap.
You know what? If this goes to 650 and the EPS for this year doesn't change, it still trades at 17.8 times this year's earnings.
I think that's fully valued, right? Because
so that's probably fully valued.
Full valuation. Yeah. You don't want this over 20 really, because then it becomes expensive. Then it becomes really, really high risk. But as it's making the re-rating move, it's crazy that this is the situation here.
I mean, do we do something stupid and just buy? Options are so expensive. Oh my god!
Don't do options right now. Like there's
the
certain
options for this week are so expensive.
No. You want to play with options? Go take the classes. We got it all set up.
No. I'm just saying that when I look at the option market for this week, the option market is pricing in a huge move forward.
It's because it's got earnings. Yeah, it's because
I know. I'm just saying huge move forward.
So like the way that works is basically, so first of all, don't tell me, but in the background, tell me what the market percent wise is pricing in that Micron move from now to the end of Friday, to the end of the week. Now to Friday, what percent move is Micron's option? What's it called?
Just looking at the contract value.
No, don't look at the contract. So take the at the money call plus the at the money put. That should give you a dollar amount. Divide the dollar amount by the price of the stock, and that is the percent.
So you said at the money call.
For Friday.
The
plus the
price on it.
Put.
Okay.
Steve is slow. It's
and
460.
What do you want on the put?
Same one. So there's 462.50 call and put. So $20 on either side. So it's pricing in a $40 move, which at $460, that's less than 10% between now and Friday. It actually, so this is the prior over its lifetime. Micron actually only moves about 7%. So that is the problem with options, that you will have to get a more than 10% move between now and Friday on Micron, which is over $40, just to break even. You have to move $40 just to make my money back. And on average, it doesn't move that much. On average, it moves 7%. So yeah, those are overpriced. You don't want to touch those. This is the last year.
The amount of degenerates that are buying contracts at 500 are insane. Oh my god!
It's on the chart, dude. Right? It's on the chart.
But for this week,
yeah,
so
you don't have to
contracts.
You don't have to hold things through expiration, but like between now and then, as price moves, the contracts also move, and they just trade what's called the premiums, and they just trade the fluctuation of the contracts.
I mean, think about this. There's 4,849 on the volume on the 480s and over 16,000 volume on the 500s. That's degeneracy. That's degeneracy.
Objectively speaking, it's still 3 days to expiration. And if earnings is coming, it's probably not getting a whole lot cheaper. I wouldn't expect it to get to 5, but if it got anywhere close to it, yeah, take those profits, baby. Sandisk is getting a pairs trade type move. So Sandisk is also doing the same thing. It's at the top of its little box. Somebody asked for this. If I did the same kind of exercise on Sandisk, I have no idea what the PE is here. I like actually being able to split these. Oh my god! Wait, what? Hold on a second. $700.
Yeah, it's this is the trade that I can't believe everybody missed is the hard disk space. It's disgusting. Everybody missed it. We were all worried about GPUs and memory. Everybody forgot about freaking storage.
Okay. Well, now everybody remembers it is a commodity and there's zero question. The market is absolutely not questioning whether or not there's data spend.
Yeah, it's up 1,200% a year.
Oh, yeah, I forget about that for a second. Remember,
it was at 41.
It only matters where the stock's going. What is my PE here? Is this expensive or cheap?
Well, it's trading at 40 times.
40 times? Oh, this is not cheap.
No. But
Micron is cheap.
It has a rocket ship of a chart. It trades at 40 times. Micron trades at 12.5 times.
What about Western Ditch?
WDC?
Yeah.
Oh, God.
XTX.
Yeah, it's trading at 32 times. And it's up 600% this year.
Cheaper, though, right?
Yeah.
Seagate, I don't really like Seagate. Well, the Seagate is not trading at the same technical level. This looks like a catch-up trade. STX is the ticker. This looks, I'm just going to tell you right now, this one looks like it's going to catch up. It's a very bullish.
Seagate?
Yeah. In this moment, the best chart setup is Seagate, STX. But you do have to be cautious of Micron earnings. And Micron tomorrow is going to move them all.
And I'll tell you, on a forward basis, Seagate looks cheap as hell.
Yeah.
Because it trades at 30 times this year, 20 times next year, 15 times 2028.
So maybe this is the trade only being up 540% in the last year. Only. Maybe that's the one. I don't hate it. So the chat wants VG. I'm not a VG. I am an Oxy. I didn't really get VG. Like, I like VG. I get VG. I didn't get what I'm trying to say. I didn't understand how they're really trying to, like, they have this deal. I do this Monday stream, which you know you don't know about, but this is like what happened over the weekend. Japan inks a $56 billion energy deal with the U.S. tied to military drills, right?
Yep.
Do you know about this?
I do.
I'm pretty sure nearly 10 billion of that is VG. They have a specific plan that if that does go through, and energy is everything. I didn't realize that I think that plan could put them up there with it. Maddie knows. If Maddie's around, Maddie would probably be the person I call him Maddie. I've never talked to the guy before, but in my mind, I call him Maddie. So it's Matt Money.
Maddie Money.
It would probably know if this is legit, like that next phase for VG's build out. I think it's multifaceted, like large scale. There it is. Venture Global reaches. So this is their phase 2. 8.6 billion of the 56. You know, Japan also released from their strategic petroleum reserve at the same time as we did to keep if there was ever like an asset class out there that's being like artificially held down, it's literally oil right now. But Japan also needs energy as well. And yeah, I think this is phase 1, 34 billion in commitments. I don't know if when this project finishes, where will that put VG in the large scheme of nat gas producers?
So
I feel like it's pretty fucking high, right?
I think, and Matt can correct me, VG will be second behind Cheniere, and then NextDecade could catch up to them, if I'm not mistaken, but venture will be the second largest, I believe.
Yeah, that's so I like it. Oxy doesn't have nearly as much,
Why did you go in Oxy instead of Chevron? Out of curiosity.
What makes you think I don't?
No, you do, because you just said that you bought
Chevron
Oxy.
doesn't have any nat gas exposure like this. Oxy does. It's not. It's like 50-50. I'm a firm believer that nat gas is actually what's going to fuel a lot of these things, not nuclear or anything like that.
It's a bridge fuel, and it's going to be here for decades and decades and decades.
Yeah.
100%.
And it's way more expensive globally than it is here, anyways. So I do like this. It just like it's always so. Oxy was specifically tied to the price of. They're very heavily tied to the stock price of the commodity. That's kind of just time. So I mean, I think VG you continue to hold, man. that $10 pullback I actually had charted. I didn't grab this. I literally had this from the earnings gap here. It's what we call a gap and go. You got your pullback to about 10 and a half. I think that's it. Yeah, so this puts it back into the 14 and a half, closer to 15 area with any continuation, possibly 16. I like it. And I like the theme. Man, energy is everything. And there's upside to be had. It's the lawsuits that I didn't know about. I didn't know what to think about that, but I like it. I like Oxy too, though. Oxy's already at my first target, but Oxy I had so people are in VG for a long time. I've been in Oxy, like I was buying all these Oxy dips. And so I'm already at like my halfway point, literally right here, right now. Same that I liked Slob, but
love SLB.
The one issue I have with Slob right now is because most of their work is in the Mediterranean, which is where all the shit's going down right now. So I feel like that could hold them back a little bit. So like Halliburton probably a little bit better right now. Yeah, it's probably doing better. And I have this little energy company called Devon, which is like ripping.
Devon's a great company.
So that's where I'm at. Slob, I like OAH. I mean, from just that perspective, those are my flyers.
All right, so let's do a couple more and then we can end it out.
VG get bought by LNG. Do you remember there's a company, people would say like there's a legitimate company that is the old Cheniere CEO went to another company.
Tellurian.
It's really, yeah.
Tellurian.
Tell.
They're goners. They got they merged with somebody.
Don't tell me that.
Yeah, they're goners.
It's not even listed.
Yeah, somebody bought them or they merged with somebody. I don't remember what happened.
No.
Yeah.
Tellurian.
Tariq Suki.
Yeah, dude, I can't. There's not many people I can talk to in the stock market that know these things like that. I would just mention it like boom, boom, boom. That's cool.
Yeah. Sharif, baby.
Woodside.
The Godfather of LNG is his nickname.
Yeah. So NextDecade, this is the same thing. This is in the same sector.
Yeah, so NextDecade is, and Matt obviously is the energy guy, but NextDecade is another LNG exporting company like Cheniere and VJ, but they're currently building out their trains, and I think their first cargoes are expected to ship in the first half of 2027, if I'm not mistaken.
The chart looks good. I might buy some of this.
Chart looks good, you say?
Yeah. The chart. So like when you see this kind of what we call like this rounding bottom, like this kind of like half.
Oh boys, stop the presses. Matty Money.
Yeah. I like this chart a lot. And I have confidence where like I can take this general area here. And sentiment wise, it's in the right sector. So these are all the checks and balances. If you're picking your stocks, what have we been talking about? Like it's energy is everything. I like this. You know, we have a lot of stuff.
So you're saying I should buy NextDecade?
No, I don't give a shit what you do. I'm saying I'm gonna buy. But I can zoom out, look left on my chart, and I see like this general area over a considerable period of time has been like general support. Oh God, whoa.
Maddie, look at WhatsApp real quick.
Hold the phone. So when I can take this little kind of thing and I have the same thing on a much larger scale, that gets me a little bit more pulled up. It's 1.5 billion, so it's super high risk. Super high risk. Like this could be Tellurian 2.0 in an instant if somebody does something wrong. So you have to know that without knowing anything about that, just because of the market cap. It could get delisted. You never know. I like this setup a lot, dude. I like this setup a lot. If it gets through, what is this? 670. Okay. So 660, this is like an inflection point here. So what I'm looking at, this is from inception type chart. This is literally 2018. This is resistance area up here. These are spikes. So like if you get into a squeeze, you can get a squeeze up here. But I think this is safe to say that it's at least going to try to get to the 660. And if it can hold over these areas like this 8, first of all, 6 to 8 is pretty good by itself. That's 30%. But if it can, the potential here is like, if it can hold this, yeah, everything's on par. So this is giving me a measurement to 9 and change, potentially as high as 11. And then if it breaks out of this entire range, then you do have a $16 stock, technically speaking.
And where do you see support at?
It's coming out of support. So when I look for a good stock, I don't want it to be at support, which is the weirdest way to think about this. I see support at like low 5s or below, like down here. What I actually want to look for is it's a range.
Well, Jason, I got a treat for you.
Hold on. Let me finish explaining this. What I actually want to look for is if this range here is what we would say I've already identified in the chart as support between, in the 5s. I want it to be already coming out of support. That way I don't have to worry about being like I'm buying a falling knife. It's already doing the bearish to bullish transition. And so I'm now buying in a bearish to bullish scenario. Dips are buyable here as low as $5. Do I expect to get to 5? No, I don't. And I don't even want it to get to $5. But if it does, I should not get shaken out on this. But yeah, like super near term support, 560.
Okay.
But
well,
again,
you said you'd never talked to the White House quant, so here he is. That money.
Steven, why are you just completely ignoring technical analysis and say, hold on a second, let me look at my fundamentals real quick?
No, I asked for that because we have to blend them.
Okay.
Look,
sorry, I chimed in late, but I appreciate you guys.
Best trades we can find, I think, are something like this. We're like, I got the fundamentals right. I can have technicals right all day, but if the fundamentals are like you're way too expensive, or like there's not enough upside or addressable market, or the sentiment is just like ass in general, like it doesn't matter how good my technicals can be. Perfect example, crypto was ripe and ready to run for many, many years, but because of the administration, it just didn't move at all. And it wasn't until you got that catalyst that kind of changed things. So like, here we are. I think we do have catalysts. I like the theme. This is actually where most of my, I'm I'm mostly concentrated in this general area anyways. But I have some SLB, which we just talked about. I'm more concerned about most of the issue being in the Middle Eastern area, and that's where Slob does a lot of work. So I think that might hold them back for a little bit, which frees up some cash for me.
There you go. Well, this one's kind of like coming to a conclusion, because it's like, when I first started buying into this one was like, I don't remember what it was, late 23 or early 24, and they still had some time to go before they actually started up the trains. But here we are. They're going to start at least getting pressure and gas in the trains by the end of this year, and hopefully exporting within the next 12 months. So it's like you're kind of running out of room. Before, everything was like pre-revenue, litigation, trying to remove the permit from, you had a bunch of regulatory people trying to push back against the permit approvals. And now everything's kind of lined up, and it's like the price has never been cheaper comparatively, and you're within 12 months of actually exporting. So we'll have to see.
Perfect timing, right?
Yeah.
Like, do they have contract? Like, who are they going to be exporting to?
Oh man, so many people. So Steve was kind of right. I mean, it might be a very large facility, but just like how most oil and gas projects, you're familiar with Oxy and how those companies work. Yeah. These are multi-billion-dollar projects, so they generally split up the equity ownership. So similar to this, they were carried on the first 3 trains. So phase 1, they didn't have to put in any capital, but they had the land and pretty much the contracts and permitting to be able to start building it. So they had Total and a couple other Abu Dhabi investment firms, and now Saudi Aramco is invested as well. But you have a lot of different contracts being pulled off. So I think the first 3 trains are like 92 or 93% contracted.
All right, we like that.
And then the 4th and 5th trains just got sanctioned within the last 6 months, and those are more owned by NextDecade. They're like 40% initially, and then 60% for the 4th train, depending on if they meet their economic thresholds. And then the 5th train is 50% owned, and then 70% if they meet the economic thresholds. Sorry, go ahead.
No, I like this in general. Like, even if I think for people that are, what's funny about this stuff, people get so caught up because they're such into like the growth investments or data center, software, hardware, things like that. It's like, I'm in the space where, like, if you believe that this generational data center build out is happening, like, it's going to take a lot more energy. And this is it, right? So this is a freaking AI play from that perspective, and a lot of other things. And it means, like, if we have a shitty stagflationary environment, it is a commodity that would actually at least hold, if not go higher in price. So, dude,
I like it.
And you're saying it's already booked for a lot of, I mean, it's good. And the chart looks good. I think my SLB allocation goes here.
A technical perspective, maybe it runs, I'm not a big technicals guy. I'm not smart like that. You're much smarter than I am when it comes to that.
Nothing to do with smarts, but
when it comes to cash flow and what it'll look like in 10 years time, it's going to be pretty interesting to watch. So I'm holding it for that. I'm holding it for, like, what's it going to look like in 2035. Yeah. And I think it'll be a really good opportunity for me, at least.
So that's like 5 to 10. I got a little echo. So I have at $12. Is this overvalued, or is it appropriately valued? Or, like, is it hard to see with that kind of runway, with that kind of
like $12, like within the next year, or?
Yeah. $12 within the next 24 months.
I guess it really just depends on how forward looking the investors are. Cause I mean, I could see a place where it's worth $12 when all 3 trains are online. But then again, people might say, okay, well, the first train's online and it's starting to make revenues, and this is what it's generating. What does it look like with 2 and 3 trains? So
this thing's giving me an auto 1-year price target. Oh, for analysts, the 1-year price target is 7.25. That's what Steve put on this.
I didn't put anything on it.
Well, it says analyst 1-year price target. I like this, man. I mean,
Well, you're gonna like this.
I like it for a lot of reasons. Appreciate you guys bringing this. I mean, I'm hunting for the next fat cow. I don't know if it's gonna be NextDecade, but it's definitely, it's the seat at the table.
Do you think that these are realistic, that they're going to hit these goals?
Is this from the one they just released, Steve? Or?
Yeah, the March deck. Yeah.
So I'm kind of curious because they were talking specifically about how they're going to have at least commissioning cargoes in the first half of 27. So I don't know if it's a similar sort of situation like what's going on with Venture Global right now, where they're quote unquote not fully commissioned, and so they're still, you know what I mean? So what can end up happening with some of these things, and Venture Global is a key kind of example of this, is they'll be selling cargoes and still quote unquote not be finished construction. And Plaquemines is a prime example. It's the second facility from Venture Global, and they're quote unquote not technically fully completed in construction, but yet they've sold hundreds of cargoes at this point of LNG. And so it kind of just goes back to, what do you consider full completion? The verbiage that they said on the conference call recently was first gas, meaning that gas will be entering the facility, the first train, meaning end of this year, meaning you have to pressurize, get over, commission and kind of make sure all the pressures are right, and do some fabric maintenance, etc., to make sure everything's running as appropriate. And then commissioning cargo should start in the first half. So while that might say fully completed, that might mean, okay, we are no longer doing any additional fabric maintenance, etc. But that doesn't mean you're not selling cargoes at that point. You probably already will have been selling cargoes. And that's why I'm kind of like excited right now, because the price is still relatively cheap and you're within 12 months, and it seems like things are going as planned. It doesn't seem like things are going awry in terms of completion. If they were, they would hopefully have said something by now.
What's happening in April, Maddie, for NextDecade?
April? I think it's just another report. I don't think there's anything specific.
I have it at the end of March, but I don't know why there's an obscene amount of options on the April 17th $6 calls. That's like very near term compared to the chain.
I think at some point this year they're gonna get the permitting for. They've already done preliminary permitting for the Train 6, and Train 6 is going to be wholly owned by NextDecade. They're going to go 100% versus the previous, and the reason being is by the time Train 6 actually starts to get constructed, they're going to actually have cash flow, which is right now they're kind of just borrowing on everybody's dime. But by time Train 6 actually comes to being built, they'll actually have cash flow to be able to build it themselves without having to go to financing. So,
which is when?
Train 6 would probably be early 2030s when it actually comes online. But the actual filing will be sometime in the second half of 2026.
Okay. I like this for sure, just on the sentiment. Like this, I'm looking at this. It looks like it could get to 8.5 quickly. It's a very spiky chart, dude.
Yeah, a lot of it is led by, is everybody interested, not interested? Are they getting pushback from regulatory? And it's kind of interesting. A lot of the regulatory piece, the big sell-off right there that you're seeing in the third quarter of 25 was actually a very interesting. I mean, I don't know if you care about this from a fundamentals perspective, but during when they started sanctioning Train 4, a lot of people expected dilution. And we're talking about a company that at the time was worth about $2 billion, $2.5 billion. And they're sanctioning projects that themselves are going to be worth 2.5 to them, right? And the total sanctioning of each train will be worth $6 billion. Yeah. And so when they sanctioned that fourth train, they actually did it through financing and not dilution at all. And so that impacted the total overall project cash flow by about 20%. And so people that are looking at it from a project level perspective going to say, oh, NextDecade is washed up. But when you think about it, if they wanted to actually finance that through dilution, they would have diluted shareholders to shit. And so I would rather, as a shareholder, take that 20% hit to cash flow and recognize that you still maintain complete ownership of that than being diluted by 50 to 100%. And so it's interesting. You have people that are really smart, in my opinion, the Hanwei Aerospace folks, which is Korea. They've actually done really well, not just from an LNG perspective, but just overall, the company's doing gangbusters. They are doubling down on this opportunity while other people are selling out. So we'll see who's right, but I'm cautiously optimistic that it's me.
Yeah, I that it's me. I like the chart. I like it. I like it, dude. Appreciate you bringing this, man. For sure. I like it a lot. Steve.
Jason.
If question.
Yes.
Or Maddie. Good God. Is there a reason that oil would go up tomorrow during FOMC?
I don't think there's anything Powell can say to make oil spike. I think that's more a geopolitical thing. But I would defer to Matt.
No, I would agree wholly on that.
All right. This is crazy.
Yeah, I was not expecting this, but at the same time, I wasn't expecting geopolitical tensions to continue and persist beyond a couple, like a week or two. So
look at this nat gas. Like the nat gas is so cheap, dude. Nat gas is more of a catch-up trade than oil now, too. Good God.
I don't know about that.
Dude, just with factoring inflation alone, that's all I'm talking about.
I gotta look at Matt, do you know what the well counts are, the rig counts right now?
For nat gas?
No, just oil in general.
I haven't
Have you looked at the Baker Hughes report lately?
No, I haven't looked.
Hold on, let me see if I can pull it.
It's on Friday. Last Friday.
Crude.
412.
Oil rigs, here we go.
412.
Yeah, so this is wild. Matt, check this out.
Dude.
We're on the same thing. I was just about to bring that up.
Are you sharing my screen or? Oh, yeah, this is my screen. Yeah.
Yeah, that's your screen. I have it up on my screen too.
This is
Yeah, in April 11th, we were at 480. April 4th, we were at.
This is only 1 year.
Yeah.
3 year. Yeah. It's what this is the drill, baby drill.
So, Matt, let me ask you this. Are we just getting that much better at production that we just don't need nearly as many wells to produce the same amount of oil or more? Because our oil production has been going up. Is it because we're drilling longer laterals?
There's a part of that. For many years, over the past, say, 5 or 6 years, you would see a lot of productivity increases per well drilled. And it's actually only been over the last 18 months where we've seen a degradation. But we're not talking, 40, 50%. We're talking about 5, 10, 15% degradation on a per well basis. So, but still massively up comparatively. And a lot of it is drilling 2 mile long horizontals or consolidation where people can do that. Before, a lot of this land was before a lot of these acquisitions from Exxon, Chevron, and others, you would only be able to drill 1 mile long laterals. And now that you have them, some people are actually drilling 3 mile long laterals as well, and seeing massive productivity gains. So yeah, there's that part of it.
Don't forget
a lot of focus on oil. What's that?
Don't forget we're coming out of winter. Yeah, I mean, nat gas I don't think has the same seasonality either from nat gas perspective. It's weird. I think summer
You're seeing a lot of drilling in the Permian though, and the Permian is very gassy as it is. It's not a very low, heavy oil sort of environment. It's pretty gassy.
Very gassy. Rocket Lab 6 dilute or raise after hours. Is that what we're saying? Little raise.
Matt, I'm gonna need to send you something. You guys gotta see this. This is insane. So I asked Claude to build me a free cash flow model for NextDecade, and I gave it the 10K, the new shareholder deck, and told it to do all the research on LNG exporting and everything else.
Is this one of your agents right now? You just did that?
I just had it build it, right?
While we were dinking around.
No, I typed it in the command. I just let it go.
Nice.
Right? So it built all this out. And Matt, I'm going to send this to you. I'll send it to you, Jason, also. So it's the full analysis with everything.
Is there like a group chat or something where everybody gets it?
I got to figure out how to give it to everybody. And then
you just
all
do
the free cash flow stuff.
Oh, WhatsApp group or whatever.
Actually, you know what? Maybe I can publish it and throw the link in the chat. But freaking Claude, if these numbers are correct, is amazing.
Yeah, I don't have my magnifying glass with me today. I know I put it on my thumbnail, but I couldn't see this. Couldn't see those numbers. I believe you though.
I don't know if they're correct or not, but let me see if I can publish this. Hold on.
Rocket Lab launches $1 billion at the money program via equity distribution. We like it. What do you think? After hours, just now.
1 billion's 1 billion.
1 billion.
It'll about double their cash. So I think they're probably looking for the company that's worth about $500 million to $1 billion to acquire.
Okay. Don't hate it.
Steven, are you sending this or are you just publishing it? Or?
I'm trying to figure out how to publish it, but I did download it so I can send it to you guys.
What is it saying is the problem with NextDecade is if you just do a pure Rio Grande facility cash flow statement, it's going to look entirely different than if you just do NextDecade.
No, I think it took everything into consideration because it gives us up to the 8th train out in 2035. And it shows us all the MTPA it's going to produce.
Beef. That's what's for dinner.
Very funny, Matt. All right. Jason, we're at 2:27. Let's do one more and let's cap it out at 2 hours and 30 minutes.
Oh, sure.
You pick the last one. Or how about this? Do rocket money for Matt.
Rocket money. No, it's good. It looks good. It's fine.
I think you guys already would have done rocket money.
Rocket Lab.
The Lab Rocket. It was already breaking out. It was on its way to break out today. Honestly, if post dilution, whatever, if after this at the money raise is done and you're still trading like $70, it's perfectly fine. It's kind of stuck. It's stuck between 77 and 68. Honestly, the best chart I've seen today is fucking NextDecade. There are Amazon we didn't look at. There's some headlines on Bezos. Depends on the time frame that you're looking for. You might want to share my screen. But like we'll see. Jassy comes out with a little note today saying that they're a little bit low. If that holds, or they're gonna do more than they were thinking, I think that can bounce to like 225 for short term. But I like Hoodie's got March Madness coming. I think we could see a bounce upwards into the 90s, but that's it. So I like Hoodie. Let's see what
Oh,
else.
so throw Hood up. A lot of people are in Hood. And then we'll end it on Hood.
Did you get your bracket yet?
Did I pick my bracket? Yes.
Well, so who's at the top?
I mean, I don't want to give
Duke?
away all my secrets, sir.
Okay, it's Duke.
I do
Maybe.
have. I'll tell you the final game and who I have winning.
I haven't even looked yet. So we have a quant, a sports better. Oh my god, look at these guys right now. They're going crazy. NCAA. Holy shmoly. These are like heavy. 6X Montreal. No, that's NHL. NCAA basketball. This are right now. Live bet. Tampa money line and Edmonton money line. There you go. Live bet. That was NHL. So many games, dude. I got to get the bracket. I think we're going to run one.
Well, if you run one, let me know. I'll join. Make sure you fill out one on my thing for the Milk Gang. I'll be giving out a prize to whoever wins. Let me bring up my bracket right now. So I'll tell you who I have in the Final Four. So I got Duke and Houston, Arizona, Iowa State, and I have Duke losing the finals to Arizona.
All right.
Arizona is the best team in basketball right now. Duke's got injuries. Duke may have the best player, but they got two guys injured.
Fair.
I don't think they're winning the whole thing. And I was tempted.
These are
I was
college.
tempted to have Michigan State knock Duke out in the freaking Elite Eight.
Anything goes. That's all I've
Yeah.
learned. Anything goes.
Anything goes.
Freaking games. They're insane. Nobody plays like this.
Yeah. Listen, I got Michigan State taking out UConn, and I was almost going to have Michigan State take out Duke.
Ooh.
UConn's not that good this year. St. John's whooped them all year long. UConn's not that good.
Han Solo. Han Solo is in my crew. Like, is it who's the quant on to take it all? Is it? Do we even know yet?
Arizona is the big favorite, I believe.
Houston. I mean,
Houston's a
UConn
good
always
team.
goes-
They're my Final Four.
Yeah, they go deep, right? They always go deep.
Houston's a good team.
The big slope, Michigan. Oh, look. All right. Hoodie, I like. It's at a good spot. If you like it, this is where you start DCAing. If you haven't, if it dips later, it could dip from a long-term perspective. You could see around 50s, but but there's nothing here saying that it's going to happen right now. March is going to be a tough quarter, I think, but remember, we have March Madness coming right now, and they have a lot of other stuff happening too. So I think this is like everything else for Hoodie. Like, if you like it here now, and you pray to God that it goes lower so that you can buy a little bit more.
Their prediction market revenue is going to be insane for this quarter because they're going to get so much for NCAA.
It's sick. I'm actually a little concerned because like they released these like hourly predictions on Bitcoin, and I have this really weird feeling that people are actually using that quite a bit as trades. Like it could be wild. Then the World Cup. So I think that we can get a bounce, and we could get a bounce into the 90s or so, but it's still got a lot of work to do moving forward. So I wouldn't say that even if we got a bounce to the 90s, mid 90s, that's it necessarily, but it's a good deal. Who's the quant guy? Sports Profit. We call it Sports Profit is the quant.
I love the fact that you have a sports quant in there. I love it.
Dude, he's one of our partners in the business, but he's been like trading, doing. I never knew, like, regularly every year, this guy makes no less than $250,000 just on the side, like doing sports bets. And I'm like, he's crazy.
All right, we're going to call it, everyone. Thank you so much for being here. Truly appreciate it. Jason, thank you for coming on and dual
We
streaming.
don't even have to do the charts. It's just fun hanging out with you guys most of the time.
Yeah.
You're the man, Jason.
Maddie, thank you for coming on. Jason, drop a link of where they can find you, please.
Just my I could say Twitter, but let me just do this.
Oh, here we go. Chel's got you.
Yeah,
She's
that's
got you on
YouTube.
YouTube. Thank you, Chels.
Appreciate it. I just put the broad one. That one has all of it.
Awesome. All right. Are you streaming it all this week?
Who, me?
Yeah.
I mean, so I stream it. So I stream all day. That's my job. So like tomorrow we do group coaching in the private group. So we do it after hours, and then I'll probably be trading live. I just do Mondays for sure on YouTube. So every Monday we do like a weekly trade plan. That's where a lot of these slides came from. Like this was my or I don't have it. I had a thumbnail this week about like me shaking hands with Jensen on stage.
Nice.
But yeah, we do that. I do a lot of Twitter spaces. I haven't done as many Twitter spaces. But Mondays and Tuesdays are the live streams for sure. Wednesdays, group coaching. Oh, look.
Well, if you guys are around, I am planning on filling in for Amit on Thursday for the market close.
Uh-oh.
So if you guys are available, let me know. You're welcome to come on.
What happens if you get it demonetized? Are you going to get in trouble? Is he going to yell at you?
Why would I get demonetized?
Well, like for this show, like what if we play some music on accident or something?
Well, we're not going to play music. But Matt, do you want to do something later tonight or not?
Maddie's
Depends when.
Not 8:30, 9?
Can't do it.
Can't do it. Okay. Not sure if I'm coming back tonight or not. I may.
If you want, you can send me a link. I think I'm going to be at dinner. Well, I'll be mobile.
You're going to be at dinner with the guys.
Yeah.
So I don't know. We'll see if I'm going to come back tonight. I will be on tomorrow with Tanner, and then Thursday market close, and maybe a stream during the day. We'll see. But all right, everyone. Thank you for being here. We really appreciate it. Enjoy dinner.
See you guys.
Hot Steve.
Adios.